Hello everyone friends, a fresh review of Bitcoin. So what's happening? Things continue to develop in a very interesting way. It seemed that the direction of Bitcoin's movement was already determined, at least locally. However, every day we receive some extremely positive and promising news on a macroeconomic level. For instance, yesterday it was the inflation data, and today the topic we'll discuss is the $7 trillion of government debt that the US needs to repay this year. All of this leads us to some very interesting thoughts. So let's divide our dialogue today into two parts. First, we'll talk about Bitcoin, about what's happening in terms of setups. Then we'll talk about what's happening on the macroeconomic level, and we'll go over some key news. Let's move on to the charts. Be sure to give this video a like. I also strongly recommend subscribing to my Telegram channel so you don't miss any important information. Don't miss any updates. Make sure to join and subscribe. The link is right below this video. My Telegram channel is Falcon Investors. Well, now let's actually get down to business. So look, the first thought. Yesterday, we received inflation data. Let's briefly analyze it. In light of this, yesterday, all the channels started buzzing about us growing. I wrote about it too. It's a completely normal story. For the past 2 years, you could say there has been a fight against inflation, and now we have data coming out better than expected. Let me show you clearly what happened yesterday. Our previous value was 3%. The forecast was a fact. We saw it slightly lower, and accordingly, the market reacted slightly. But fundamentally, this doesn't change the situation. Why? First, I look at what's happening on the chart. Second, because inflation at the moment was the main and key problem. Certainly, we had extreme values back then, and inflation was the key focus. Now, yet the entire situation is being assessed altogether, like Powell, the FRS, and generally everything we are looking at. We are no longer looking only at inflation indicators. So locally, this gave us some kind of rebound. Globally, let's see now how the situation has changed. So, let's take a look at what's happening on the Bitcoin chart. The zone we've reached, marked here with a purple block, is holding us for now, but if we look at the daily time frame, many people, of course, are currently going long. And in my opinion, from the perspective of positioning, this might even be correct. Yes, we took liquidity behind this low, and are counting on some kind of rebound, which we have captured. So, the question is, what are the nearest targets? And here we are, actually, approaching them. We can say, plus we have the 200-day moving average, under which we are standing globally. Let's take a better look at the global picture. Okay, we captured the rebound. What do we expect next? We had a structure, we had a trend break level, we exited, broke the daily levels, and returned for confirmation. And now pay attention to how this structure looks. High, low, high, low, high, low. Not every low, of course, is lower than the previous one. Each high is lower than the previous one. Our ideal short structure looks as follows. Each high lower than the previous one. Each low is lower than the previous one. Yes, here it's a bit broken, meaning we have lows that haven't been updated. But overall, we have an absolutely descending structure, meaning if we look at the price channel, the price is decreasing. Moreover, let's take a look further, besides the fact that the trend was broken here, into a short. Furthermore, we now have a trading range, and secondly, this zone is also a short for us. And accordingly, in order for us to break above now, a huge number of events must occur. We need to break the trend in the opposite direction. And here, as you can see, naturally, the first resistance zone is at 85,600. And accordingly, this is just the minimum threshold for the cap, with which we can even start talking about something. But globally, the level of $92,000 remains key for me. And for us to talk again about continued growth and some new historical highs, we need to reach this level. For now, everything looks quite bearish. And for example, if you have a large spot portfolio and you are not planning to sell it, but are holding it for the long term, perhaps it's not the worst idea to consider a hedge, short here, just to simply hedge your positions. You can look at it from different levels. Yes, you can look from here. From here, it's an ideal scenario. Yes, for example, this is generally a return. Again, here, for instance, if the structure is drawn in this way, here it is drawn like this, like this, like this, and essentially we fly lower. If, for example, there is an opportunity to open some kind of hedge short here, it's not the worst scenario for those who have accumulated a large portfolio. Accordingly, there might be a proportional story. So for me, the situation currently looks unchanged. I expect, in my worldview, a move lower. Why, again, a move lower, because we will definitely talk about this now. And from there, accordingly, I will be waiting for a reversal. The plan remains the same. I intend to buy back all these levels, and moreover, I sincerely hope that there will be an opportunity to buy back. And in my scenario, in my worldview, this would be very, very positive. So that overall, locally, you can even short. We have a short structure. Head short is not an unnecessary idea. Longs, undoubtedly, levels will provide bounces. For example, the level of $74,000 is very likely to give some kind of bounce. Then, accordingly, each of these liquidity zones, for example, this zone at $68,000, upon reaching it, will naturally also provide a bounce. Therefore, it's just a matter of convenience for each person here. Someone, for example, might short and play a longer game here. Someone who likes to capture bounces on longs, overall, it's not the worst idea. Again, the idea is that from a long-term perspective, looks more promising. The main advice probably is not to play with high leverage right now, because in fact we see what's happening. The market is correcting, negative news is coming out, macroeconomic issues, trade wars. At any moment we could see a big candle of minus 20%. Moreover, if we look, for example, at the S&P 500, a few reviews ago I drew a level, for instance 5,500, which in fact we might reach. And please take a look, in fact everything is happening much faster than we expected. And now, there's even a question, yes, is this really the final boundary, or will we continue to correct further, for example, somewhere over here? Yes, let's do it. Let's mark the level now. For example, somewhere in the zone of this low, that is, which is also very possible. Therefore, you just need to be very careful. Let's take another look at the bigger picture now. Try to assess where all this is leading, because overall I think there's a logical structure to all of this. Before that, guys, a small traditional reminder. If you trade, always trade on a quality exchange. For me, Bybit has been a reliable partner for many years, so if you don't have an account, I highly recommend signing up and giving it a try. Using my link and promo code under this video, you can get the best commission rates and up to $30,000 in bonuses on your first deposit. Now let's proceed structurally. So, what do we have here? We have an interesting picture. I will even probably open the picture so that it's clear, and I'll comment on it. I borrowed this post from a friend, and it's a good post, and it can give us a more global understanding of what we can generally expect. So look, the United States has a task to pay off part of its debt in 2025. This is a huge portion, $7 trillion. So what is it related to? I'll briefly go over the main points. Let's delve into it. This situation is related to the short-term debt structure, issued over several periods. So how did this happen? We had several things. The first was the massive issuance of short-term bonds. That is, we had the pandemic, you remember what was happening. Accordingly, short-term treasury bonds were actively issued in order to quickly refinance the budget. And these bonds, as a rule, have a short maturity period of 2 to 5 years. And a huge portion of these bonds, the end of the bonds, falls precisely in 2025. That's the first point. So the second point, this is the policy of low interest rates and its consequences. So you remember what happened to us in 2020, 2021? We had a very interesting, phenomenal story related to the pandemic when the US Treasury actively borrowed money for a short term up to 5 years because it was very cheap. Now, accordingly, the maturity of these debts is beginning, and a peak of these payments arises, which again requires refinancing. As you understand, no one will take this debt and just pay it off with pure cash. Such debts are usually refinanced. That is, we had some bonds, and accordingly, new bonds are issued, money is borrowed against them, and the old ones are paid off. But what is interesting here, during this period, if the rates, here's a very good point written here, yes, if the bond rates have significantly increased, as is happening now, the refinancing process becomes more expensive and complicated, creating risks for the budget and the market. First, and accordingly, considering the redemption amount, a very important point, the year 2025 reflects the subsequent. The consequences of the previous short-term borrowing policy, and now the question, in order to borrow again, essentially at current rates, it is very expensive to do so, and for the lender, of course, it is profitable to lend cheaply by managing the interest rate. In the USA, as you understand, the people who manage all this have levers of influence over it, and accordingly, based on what I said earlier, inflation is no longer the key problem for us. We can assume that the rate will be lowered in the near future, and by the end of 2025, we will see rates significantly lower than we have seen before. And as you understand, low rates are very likely to lead to our markets growing again. So now, probably what I'm getting at, because it's a very good thesis, is that now we can think about what's happening. The task of big capital, Malvia, and the task in which I am involved is to dump the markets, get excellent entry points, have the opportunity to lower rates when the markets are scared, when liquidity flees from the markets, and thereby essentially reboot the economy with maximum benefit for themselves. Based on this, what are we talking about, and what does this give us at all? This tells us that the only problem we might face now is the problem of large loans, large leverage, so to speak. If you open positions with huge leverage, aiming for a short-term perspective, you might be liquidated. If you play the long game with a very high probability, the market will turn positive. After some correction, it will turn around and there will be a fairly long period of time of growth. Therefore, the main task for the next 6 months is simply non-tadin binibizorne, not cheshon to be liquidated, but rather to reorganize your portfolio for the next cycle. Enter with well-prepared hands and simply stay with the money. This is actually the key task. Therefore, spot is everything for us. Avoid large leverage while trading locally. All of this, as it were. Hedge and definitely adhere to risk management. Use stop losses. Then everything will be okay. Therefore, I do not deviate globally from my scenario. Local correction, very much so. It interests me and I like it. Globally, over the course of a year, I think the market will do well and we will see another major development cycle. Of course, I could be wrong, but for now, the picture is coming together in this way. The puzzle as a whole looks quite logical. If you have any individual thoughts and you think differently about everything that is happening now, if you have a different opinion, be sure to write in the comments. It will be interesting to read. Otherwise, dear ones, everything you need to know today to get the maximum profit in the market. Be sure to subscribe to the channel, hit the bell so you don't miss new releases. And of course, every comment is very important to me. So don't be lazy. Go right now under the video. Give it a like here. Share your comments, your thoughts. Profits to all. See you next time.